Well, hello and welcome and hello. This is Danny Deals. Thank you for tuning in to Un Poco Moss, the show where we try to give you just a little bit more on behalf of executive producer Hurricane Lopez and supervising producer Stock Karen. We would like to say hello and welcome. Guys, today we would like to talk with you once again about the Carvana stock. Carvana had that incredible little run there from under $10. Of course, stock was all the way down at 8, popped up over 10 to 12, popped up to 15, sat there for a couple days, and then just made an incredible run on June the 8th. They revised their estimates upward, all kinds of good news came out on that day. Fell back down to 19, marched up, popped up again to 27 bucks on June 15th. Trade a little bit sideways, came back up again. As you guys probably know, if you're looking at Carvana, couple of levels that have been support and resistance, just pivot points on the stock, like 25 and then like 31.60 or something like that. Um, so it's not really shocking to see this sort of short squeeze run from nowhere peter out at about the $25 level. You notice out of the three runs, two of them were to 25. Of course, this one jammed up to 27, but then quickly fell right back down to 25, where buyers and sellers once again met. What is going on with the stock, guys? Is there actually any change? Is there actually any positive momentum as a company fundamentally? I know there has been a lot of momentum with the stock, but that essentially fell apart because the momentum was back down today. But as far as the company, why did it shoot up? Was it just a short squeeze, or are these fundamentals real, guys? Here's an article that's in Insider Monkey today, June 26th. Reasons to short Carvana stock. This basically goes over a lot of the issues that are structural within the Carvana company, because I mean the management of this company was just not experienced, and they grew extremely quickly. They wasted a ton of money on ineffective advertising on things like giant glass buildings where people could pick up their cars. That while they're a nice novelty, they really don't help you at your bottom line. In fact, they hurt you, I would say, dramatically, and because those things are very, very costly, and keeping them up costs money, and it just tears into every unit that you sell to maintain 33 of those glass buildings. In my opinion, they could have built three of them, or five of them, or 10 of them, or one of them, and had the same, just made it a marketing gimmick. The whole point of buying your car online and getting it delivered, what's the point if you have to go down to the facility anyway? I mean, there's so much competition, guys, for used cars. If you go to any car dealer's website who's in your local area, you could purchase a used car online there and they'll deliver it to you, or you can pick it up. But then you establish the relationship with the local dealer in terms of sales and service, rather than just get your car on some website where you might have a lot of problems with the vehicle, the title, all those types of things. So this article is just kind of funny. It's very direct. 4 billion market cap online platform for buying and selling used cars. Originally hyped as an innovative disruptor, Carvana is now recognized just to be a poorly run auto retailer, struggling under the challenges of a severe industry downturn and the unsustainable burden of 6.5 billion in debt. They've shared the concerns before, but after the stock ran up 165% in only a month on misguided optimism for profits that amount to little more than buffing the paint job on a totaled car. And they just go through the history of the cars. But ultimately, the business can't escape the following reality. Whether a small local dealer or a tech driven online platform, flipping used cars is a tough, capital intensive business with lousy margins. And two, any company can grow quickly and take share if run irresponsibly on costs, especially if capital markets are willing to foot the bill. Yeah, if you're willing, if there's other parties willing to extend all this credit to Carvana, and Carvana just spends and burns money like a drunken sailor on advertising that grows their sales very rapidly when they're losing money on every unit. Even in their best year, guys, in 2021, they were still losing money. Like they still lost like 100 million, and then the next year they sold a little bit more, like 13 billion. They, lost almost $1 billion. So even when this company's sales went absolutely parabolic, did they, control costs and at least, pay down some debt and, put some cash away for a rainy day? Of course not. They still lost money in those years. And if you're doing, 12 and 13 billion in revenue and you can't make money, during a completely bullish market where again you were sort of the only game in town, all this COVID circumstance gave you this huge competitive advantage out of nowhere, and you still managed to fumble the ball, mismanage it poorly, because it's, this family-owned business. The dad is owner of Drive Time. The kid starts this company. It's very admirable, and it's a great story, and that's all well and good, but the guy's not qualified to run the business, and his finance degree was from Hamburger University, I would guess, because they just took a bunch of crappy debt. You can actually read the short report if you want to. I didn't read the whole thing, but this is June 2023, Kerrisdale Capital, Carvana running on empty. And I read quite a bit of it, the executive summary, then I started to read through some of the evidence, but guys, the numbers here just don't add up. That's the problem with Carvana. Like they've never made any money. This liquidity is thin and investors bear risk of dilution. They're talking about 1.5 billion in cash, and revolving credit facility, but that facility is only good for financing of automobiles. They only have 500 million on cash to pay for debt interest, and their debt interest expense is going to be almost that much just this year, and it's going to be even more next year. So Carvana is supposed to be slashing interest expense and debt, but they're really slashing neither. Coordinated group of bondholders that collectively owns 90% of the bonds. A distressed debt exchange that would have modestly reduced the face amount of the debt and avoided equity dilution was met with an immediate opposition from the group and ultimately failed. The ongoing standoff, particularly as we approach Q4 2023, when 255 million in bond interest payments are due, increases the risk that Carvana will look to take advantage of the recent rise in share price to issue equity. Guys, they have to dilute you here. They have to. You have to either get out with what you made or short the stock or do what you have to do. But if you're adding here just because you're hoping for a short squeeze, you're hoping like Reddit or Wall Street Bets is going to come to your rescue. I mean, guys, this is this guy. He's not here. Stock Karen is here. That's Stock Karen, guys, and she has a complaint. This company doesn't make any money, guys, and their profits, their sort of upward revisions this year were just completely baloney. They basically pulled forward sales of loans and used every other accounting gimmick they could to make their numbers look a little bit better immediately, but it's not going to be something they're going to be able to repeat quarter after quarter. It's a very limited, it's something you can only do a limited amount of times with a limited amount of loans, and then it's over, guys. And this company is just I don't know. I don't see the path forward. That's what I'm trying to understand. Like CarMax just had a good earnings surprise. Stock jumped up $10, but the fact that CarMax is doing well and actually making a little bit of money only goes to prove my point that, the Carvana model really is flawed. It's like nobody wants to buy their cars from a giant glass building. It's not a unique selling point. It's not a competitive advantage. It's like CarMax, they sell those really pricey warranties that are really high profit, and they get people in really bad financing deals, and they have a lot of traffic coming in that actually sells them good cars for a lot less than they're worth. So I see a certain amount of merit to, the CarMax model. I'm not saying it's a good investment, but I'm saying if nothing else, CarMax and companies like this are going to put Carvana out of business. The hybrid model to me makes a lot more sense, where you look online, but you're looking locally, because if you get cars from all over the country, there's going to be additional delivery fees. There's going to be a huge expense to transport that car across the country. I'm just trying to understand what in Carvana's model, this sort of machine learning, algorithmic, whatever, they're going to get cars, they're going to, buy cars lower and refurbish them in house. But they don't have like, I just think the facilities are decentralized, and as the short report noted, and as I've read in a couple of other articles, they did not bring in like seasoned automotive people, seasoned operations people. It's like a friends and family operating this giant multi-billion-dollar business and just having absolutely no idea what they're doing. That's my impression. Guys, taking a look at the short interest on the Carvana stock, we see that as the price has gone up, in fact, the short interest hasn't really gone down much. It was about 65% when this run started, and it's held anywhere from approximately 62 to 65% ever since. It's still estimated to be 63%, down only 2% this week, and it's probably been reshorted just a little bit right here as the price was passing the $20 region, and then I think it's being reshorted just a bit right now. Days to cover are down significantly from as high as 4 to 1.6. Utilization near 100% at 99%. Cost to borrow holding steady around 10%. Guys, what is the bull case for the Carvana stock? Like, that's what I'm trying to understand. Like, what do they do? This is not a particular purchase people like to make sight unseen because there's too many horror stories. You have to see if the thing fits you. I think also warranties and different issues are going to become problematic. The wave of repossessions that everyone says are coming. I don't know how much that affects Carvana. I don't know how many loans they're actually holding as opposed to selling. Obviously, they're pulling some of those sales forward to recognize additional revenues immediately in the coming immediate time frame. So, guys, they're pulling out all the stops, but the only thing that makes sense here for their survival to keep, paying the executives is to basically raise money, dilute the hell out of shareholders, and then try to placate the bondholders long enough to keep this pyramid scheme running because. They're basically insolvent, guys. They have no profits to pay this debt. They're not going to have any cash flow this year. They can't pay the interest on the debt. I mean, they have 20, 30 bonds that are, they're 10% bonds, guys, and that's like $3 billion. I mean, what are we talking about here, guys? This is throwing good money after bad. It's a horrible investment, and management has utterly failed. They've had horrible cost controls. They've spent their money, spent shareholder money, investor money, bondholder money on extremely dumb things. And they have not really got the margins. Even the gross margins are bad, guys. Not to mention just losing money at the bottom line. Their gross margins are crappy because their executive team stinks. I mean, this company stinks. Sell Carvana, short Carvana, don't buy Carvana, just ignore Carvana. Go buy one of their glass, buildings and just look at it for free. Drive your own vehicle up near it and go pick up your own vehicle. Be like, hey, I'm picking up my car at Carvana. Then go buy another car someplace that makes sense, guys. That's all I can tell you. The Carvana stock, what is it going to do in terms of the price action? Is there support here in the $21 region? No, no, there isn't. This turd is probably coming back. You know, I would say it's going to fall back to this 1580 area in the short term, and then hopefully for Carvana, they're going to scramble, they're going to get on the life support, and they're going to consolidate sideways. But otherwise, I believe this turd is probably going to zero, and I would act accordingly. But I don't give financial advice, guys. I'm just some nameless idiot on the internet. Or actually, I do have a name. It's Danny Deals. That is my name, Danny Deals. The show is Un Poco Mas. On behalf of Hurricane Lopez, thanks for tuning in tonight. Topper time check, 7:52 p.m. out here in beautiful Los Angeles, California on June the 26th, 2023. Stock is Carvana. Ticker symbol is CVNA, guys. And this company is an absolute giant turd. Could it short squeeze again? Absolutely it could, but it's very hard to predict. It's very hard to time, and in my mind, that's no way to invest. But you do you. You might have made a ton of money on the last one and got out at the right time, and you might be a flipping genius. More power to you. Health and happiness.